Welcome back, everyone. West Pharma has been the best dividend aristocrat to own this year. The stock is up a little more than 50% since January 1st, earning it the highest return amongst all of the dividend aristocrats. For perspective, NOBL, the ProShares Dividend Aristocrat ETF, is up only 2.5%, and the S&P 500 is up about 21%. Overall, the dividend aristocrats have not fared too well when measured against the S&P, but that doesn't mean all of the aristocrats are having a rough year. 13 aristocrats have better returns than the S&P this year, and 30 aristocrats are doing better than NOBL. Let's take a look at the 13 winners this year to see if you happen to own any of them. I already mentioned that West Pharma is the best aristocrat of 2023 thus far. Not too far behind we have Granger, that is up a little more than 48%. In third place is Pentair, that is up 43%. And Cardinal Health has also managed to sneak into the 40% club. 3 aristocrats are up more than 30%. Ecolab is up 38%. A.O. Smith is up 35%. And Brown & Brown is up 33%. And 6 more aristocrats are up more than 20%, sitting just ahead of the S&P. Linde plc is up 28%. Stanley Black & Decker is up 26%. S&P Global and Cintas are up 25%. Roper is up 23%. And Nucor is up 22%. On the flip side, there are 38 aristocrats that are underperforming NOBL this year. And of these 38, 34 have negative returns on the year. The worst performing aristocrats are Walgreens, Albemarle, and VF Corporation, all down more than 40%. 5 aristocrats are down more than 20%, and 8 are down more than 10%. If you happen to have a crystal ball that would predict the future, and it told you which aristocrats to hold during each month of the year, you could be up more than 350% in 2023. This would be Albemarle in January that returned 29.78%. West Pharma in February that was up 19.36%. McCormick & Company in March that was up 11.96%. Medtronic in April that was up 12.81%. Albemarle in May that was up 4.35%. Stanley Black & Decker in June that was up 26.24%. ADP in July that was up 12.5%. West Pharma in August that was up 10.56%. ExxonMobil in September that was up 5.75%. General Dynamics in October that was up 9.87%. And Clorox thus far in November that is up 21.43%. The odds of picking these 11 stocks during the last 11 months accurately are about 1 in 457 trillion. Statistically, you have a better chance of winning the lottery, which would also lead to a much higher payoff. I know this information, while interesting, is not overly beneficial to you as an investor, so let me get to the point. There are simple ways that can help you identify better dividend aristocrats. These strategies won't help you hit annual returns of 300%, but they might give you a slight edge on NOBL and the S&P 500. One of the strategies I've tracked for a few years now is something I call the fastest expected growth strategy. Its premise is simple. I try to figure out which aristocrats are poised to grow the fastest in the future. The way I measure this is also simple. It's basically the combination of 3 different metrics. The first is the current dividend yield. The second is the current under or overvaluation as measured by dividend yield theory. And the third and final metric is the estimated rate of earnings growth with a margin of safety applied to it. By combining these 3 metrics, I came up with what I call a return estimate for each dividend aristocrat. These estimates are not always very accurate, but overall they have worked out pretty well since I started tracking this strategy in mid-2021. Since August of 2021, the 10 highest rated aristocrats on this list have a total return of 12.79%, compared to a return of just 2.6% for NOBL and 3.51% for the S&P 500. I have also tracked how a buy and hold approach for this strategy has worked out, and the results are a little worse. The fastest expected growth portfolio has a return of 4.36%, which puts it 1.76% ahead of NOBL and 0.85% ahead of SPY. That's not a big margin of alpha by any means, but it is positive alpha nonetheless. What this strategy also offers is a dividend-focused portfolio made up of very high-quality dividend aristocrats. It provides a stable level of dividend income that is always growing and a pretty healthy level of capital appreciation. To help me automate this strategy, I built my own Google spreadsheet that I share with my Patreon community. This spreadsheet can crunch a custom dividend yield theory valuation for all 68 dividend aristocrats in a matter of a few minutes, and it also automatically updates the estimated rate of return anytime I run the built-in macro. It's a very handy tool if you happen to like the Dividend Aristocrats. The summary output table shows me the current and fair price for each aristocrat based on dividend yield theory, as well as whether the aristocrat is under or overvalued. I can see the current and trailing 5-year dividend yield. The trailing 5-year dividend yield is calculated using all trading dates from the past 5 years using the most up-to-date dividend data. I also built in a little performance test to show me whether applying dividend yield theory as a valuation tool has worked out favorable for each aristocrat. This performance test looks at a 7-year window starting 8 years ago and tells me what the average return has been if I bought any aristocrat when dividend yield theory suggested it was undervalued, overvalued, or if I simply bought on all days. As of the latest update, which was a few days ago, dividend yield theory led to more favorable returns for 56 out of the 68 aristocrats. It's not perfect, but I'd call 56 out of 68 a pretty decent rate of success. The table also shows me the past 1, 3, 5, and 10-year dividend growth rates. It automatically pulls in the latest 5-year earnings growth forecast for each aristocrat, and a formula computes the estimated rate of return based on all of this data. Below the summary table, I can also pull up the dividend yield theory chart and the dividend yield history chart for any of the aristocrats. It does take a few seconds for the spreadsheet to crunch this data, but if you're a visual creature like me, I think you enjoy looking at these charts as much as I do. I've been documenting this strategy as well as 2 other strategies on Seeking Alpha since August of 2021. You can find me on the website under the name Dividend Yield Theorist. The latest set of selections for the month of December were published just a few days ago. I believe Seeking Alpha keeps these articles free for a few days, and then they all go behind a paywall, so if you don't have a premium subscription, you won't be able to see the full history of these strategies. But don't worry, I provide a pretty good summary of past returns in each article. In case you can't see the articles, let me give you a quick update on November, and what changes were made to the top 10 list for December. This data is as of November 24th, so the returns may differ slightly, depending on when you are listening to this. The 10 chosen aristocrats for November were Brown-Forman, that is up 8.18%, Cincinnati Financial, that is up 2.37%, Ecolab, that is up 17.65%, Leggett & Platt, that is down 1.73%, Realty Income, that is up 16.64%, PPG Industries, that is up 12.01%, Stanley Black & Decker, that is up 8.51%, Cisco, that is up 10.09%, Target, that is up 20.97%, and ExxonMobil, that is down 1.24%. Collectively, these 10 aristocrats are up 9.35%, which is 2.48% better than NOBL is doing in November, but it is slightly worse than the S&P 500, that is up 9.56%. The top 10 list for December includes 2 changes from November. Ecolab and Cisco are replaced by Essex Property Trust and NextEra Energy. The 8 other aristocrats remain unchanged. The starting dividend yield for the top 10 aristocrats chosen for December was 3.75%. Come December 1st, this yield might change slightly. I always like to make my selections for the upcoming month a few days before the current month actually ends. This gives me a few days to do a little due diligence on the chosen aristocrats, and I can also get the article out and published before the month actually starts. I believe this simple strategy makes sense, and it has the potential to identify dividend aristocrats that are opportune investments at the moment. Not all of the chosen aristocrats will go on to generate strong returns, but collectively, I see merit in the strategy. If you'd like to check out the spreadsheet, there is a link to my Patreon page in the description below. If you enjoyed the video, please do me a favor and give it a like and subscribe to the channel. Thank you for watching, and see you next time.